everyone. Raise your hand if you can hear us in the chat, or you can chat with us, either or, whatever's better. We're so happy you're here. We're super excited to have you today. We're going to talk about money, and I think that's super important because for folks your age, like teens, you don't necessarily always have these kind of classes in school. I'm sure, right, Duran? Is that correct? Yeah, I don't think I can't hear you, but I don't think they're teaching.
Can you hear me?
Yeah, now I can hear you. Yay.
Yes, yeah, I agree.
Hear us? Yeah, raise your hand if you can hear us. Okay, perfect. Yeah, I know all the schools in Santa Clara, they don't, include that budgeting or credit cards or anything in their curriculum. So this is such a great way to get started. And I'll have to tell you that I have a lot of adult friends that don't know these kinds of things too. So if you're here today, you are getting a good start on life. And we are so lucky to have Duran Neumann from KeyPoint. And KeyPoint is one of the credit unions located in Santa Clara. There's a branch located in Northside by our Northside branch library. And they always support our summer reading program. So we are so thankful to work with KeyPoint every year, year in and year out. So thank you so much, Duran. And I think you'll get to it. Another one thing is I think that they have an awesome $10 gift card to Amazon. So if you stay through the whole workshop today, you might get in that drawing. So thanks for coming. We'll definitely be taking questions, throughout. Duran will do some pauses here and there, and we'll do a big Q&A session at the end that I will help moderate. So write down your questions and let's get started. Thanks.
Great. Thank you very much, Rachel. And let me share my screen. You may need to make me a host to share my screen. Rachel, can you make me a host so I can share my screen?
Hopefully it works now. Sorry about that.
Okay, great. Thank you. Okay, let's see. Okay, so I go back to. So as Rachel mentioned, welcome everyone. My name is Duran Neumann, and I'm from KeyPoint Credit Union. And today I'm going to talk about the basic of money management. This is the first part of 3 sessions. The first session is the basic money management. We talk about what are financial institutions, a little bit about terms, what are the product, the services, the different definitions of how about money management. The second session and next week talk about understanding credit and money management. What is credit? What is credit score? And we go a little bit into depth about how the credit score is generated and so forth. And the last session we go to going to be about putting everything together, how to manage your money. Talk about budget and talk about different tools that can help you to manage your money and make sure that you have a healthy financial future. You can actually be successful at putting all this together and managing your money. One thing I have to make a disclosure, if this is not a financial advice. Many times people ask me about financial advice, what stock I'm going to invest and so forth. So this is not the session for this. This is not financial advice. This is about really purely educational about how to manage your money and terms and definitions. So there are a lot of questions about money, a lot of definition, a lot of words that you hear, and sometimes you don't understand what people talk about. So today we're going to try to make it very simple. One philosophy that I have is I always like when I start a certain subject, I like to learn the definition to different terms, and to make it, when you understand those, it makes it very easy to understand the whole subject. If you have any question, please don't hesitate, put them in a Q&A or chat, and I'll be happy to answer any question you have regarding the subject today. So really, we will start is how to manage your money and what is money. So many of you know that the evolution of money before actually was money or bills or coins. People actually used to trade shells, used to trade fur, used to do different trading to get goods and services. And to the years, people start developing a different system where people start making coins, start making paper money that gives certain value that towards certain product and services. So people will hold these coins and hold the money, and they used to keep them from themselves. So if I asked to go and make a payment to someone, I will go and actually pay them with the coin that I have, or gold or silver or anything that has value to it. So to make things easier, um, what happened is people needed some organization, something that will help them to mitigate payment of money, where I keep my money. It wasn't safe. You keep your money in a small wallet or purse that you have, and someone will steal it. So it wasn't safe to go around with money. But also, if you had to make payment for people that far away from you and get services, you wouldn't be able to pay them unless there's some institution, some company that will help you to mitigate this payment system. So this was the birth of the financial institutions. We see them in many parts of the world where people will hold your money and they will help you to manage it and pay other people. So what is financial institution? It's very simple. Financial institution is an organization like a credit union, a bank, a brokerage, a place that is licensed to receive deposit, take money from you, and make loans to offer services such as deposit account, checking account, loan, investment services. In most countries, those financial institutions are regulated by the government or central bank. So you walk around and you see credit union or bank or brokerage. Those are organizations that are licensed to handle your funds, handle money, and they have actually a license from the country to make sure that there's no fraud. People really, it's your money is secure, and so those are financial institutions. So it's an organization like credit union, banks that help you to manage your money. Financial institutions are important to the economy because they provide a vital service to both consumer and businesses. So it provide a safe storage for your money, but also it help people and businesses to conduct transactions. If you have to pay for services, you have to buy some product. If there's an easy way, you use the financial institution to provide this payment with your money that you have in there to actually conduct this payment. But also you need a financial institution that will help you to give you loans, to lend you money, and this is all regulated. So those are companies that actually help you to deposit your money and then to give you some loans. So those are really financial institutions. The different kind of financial institutions that we're going to go over, financial institutions include credit unions. You walk around, you see credit unions. I work for credit unions. I also work for banks. Retail banks, so credit union, I will mention some. You have a KeyPoint credit union, a credit union that I work for. There's Mary West, there's Patalco, there's Navy Credit Union. There are many, many credit unions around the country. Retail bank, when I talk about retail banks, you talk about Wells Fargo, Chase, Bank of America, First Republic, and many other banks that you have around. So you can see them almost any corner you see a financial institution. Commercial banks are banks that only handle businesses. So commercial bank will be Comerica. It's only handle businesses. So if you come there, you want to open your personal checking account or savings account, you wouldn't be able to because they only help businesses. They cater to business client. Mutual banks, again, those are different kind of bank. Investment bank where you can make investment, a brokerage, and private banks. Usually private banks usually the private banks cater to people who have a lot of money, and they provide different service. Sometimes there's some banks that only allow people that have more than $5 million to join there, and they provide different services catered to those clientele. So there are different kind of financial institutions. I'm sure you see them. Some of you may have some checking account, a savings account, and credit union or banks. And online banks. There's also online banks that don't have physical branch. It's only online presence. And central bank. Central bank is actually, when you hear the word central bank, is usually a government entity. It doesn't sometimes controlled by the government, but it can be independent organization like the Federal Reserve here. However, it's regulated, and usually a central bank is the bank that regulate all the other financial institution as far as regulation, as far as all the rules that they put out. So people actually, when they bank, there will be a safe banking practice that handled by the banks, and also help the health and the safety of the economy. So those are different kind of banks and financial institutions that we have. So I want to go a little bit talk about what are the difference between credit unions and bank, because as a consumer, you see most people go to either credit union or bank or both. But I just want to go over to see what the difference between them. And I'm not talking about this bad or good. It's just what the difference between the two institutions. So for credit union, you must be eligible to join based on your employer, residence, or other affiliation like school, church, etc. To bank, anyone and anyone can be a customer. So I mean that anyone can join a bank regardless where they live, where they work. For credit union, most credit unions started as a cooperative where only certain groups can join. So used to be teachers credit union. So if you're not a teacher, you cannot join the credit union, or be certain teachers, or can be certain hospital doctors credit union or technology credit union. People only work for technology companies could join, or can be only for a county. If it be, let's say, if so, only for Santa Clara County. So people that only live in Santa Clara County can join that credit union. So you have to be eligible to join the credit union. For bank, anyone can join. Customers are called members at credit unions, where and the banks, they call it a customer. Credit union offer the same services and bank product and services that banks offer, and credit unions are actually a cooperative. They're not for profit. What it means that all the money that we make goes back to our members, to our customers. Where in banks, all the profit that they make is go to the shareholders, to the people that own. So credit unions cannot be traded on a stock exchange, don't have stocks, while banks do have stocks and trade on the stock exchange. Now, on the way it's governed, I mean that banks have a board of directors that it's paid, while credit unions are all a board of directors. People that are managing the credit union are volunteers that are elected from our members, membership. So we're not for profit or a cooperative, where banks are for profit. We all pay taxes. Credit unions pay taxes, but there's certain tax that they exempt because the profit goes back to the members. Well, banks pay all taxes, because what happened is they pay the profit to their shareholders. And we all regulated by the government. The banks are regulated by the Federal Reserve or other office within the government, and the credit unions are regulated by the National Credit Union Administration. So this is a little bit the difference between banks and credit unions. So we're going to go a little bit about terms. So what are deposit or loan accounts? A deposit or loan account is a financial account maintained by financial institution in which the financial transaction between the financial institution and the customer are recorded. What it means that there's a ledger, I would say, look at it as a book, it's an electronic book, that every time that you put money in your account, it's recorded. Means that we know that if you come in and put $10 in your account, it's recorded, you have $10 in your balance. If you take a loan, it's recorded, you took a loan for $100, let's say. So it's all recorded. So accounts is something that it's a ledger, it's a certain recording system that say how much money you have, how much money you took, and those are what our accounts are. Account holder. So when you have an account, you consider an account holder. So if I have a checking account or savings account, I'm an account holder. I'm the only person that authorized to make transaction on this account. So you have the person that allowed to do it. As a teenager, you probably gonna, because you have to have an adult sign for you, because until you're 18 years old, you cannot legally sign. So what it means that you have someone that is helping you as an adult manage your account, and they can sign the account. So you have a first person on the account, you're going to be the first person on the account, and then you have a co-joint on the account. Your parents or guardian will be on your account, and they will also be able to sign, but you're an account holder. If you have an account, you're an account holder, and you're the only one that can transact. You and the person on the account can transact and make business on your behalf. So let's say that I come and I want to make transaction on your account. I cannot because I'm not registered on your account. So this is account holder. Joint account, again, is account that owned by two or more persons. Either party can conduct transaction or separately on the account. So what happened is, if you come and do transaction in the account, you can do it. If your parents or guardian can come in the account, they can do transaction in the account. So you don't have to get the permission to do transaction on the account. You can do transaction and they can do transaction to the account. But they are owners of the account. Anyone that is registered on the account is an owner of the account. So what we have deposit account types. So they're checking account, their savings account, money market, certificates. So those are type of deposit accounts. And I'm going to go what we have. Loan accounts. What type of loan accounts? We have home loan as a mortgage. When you hear the word mortgage, it's a home loan. It's a home that's taken against a home. It's called a mortgage loan. Car loan, student loans, personal loans, and credit cards. Credit cards are considered loans because you use the financial institution money and you have to pay it back. And business loans. So any questions so far? Rachel, do we have any questions?
Yes, just one so far, unless you guys want to type one in, I can check. Will you be sending the presentation out after the call?
I'm not going to send the presentation. No. They can see it, and I guess you're recording in YouTube so they can see it, but I'm not going to send the presentation now.
Yeah, you can go back to it. We'll have it saved on YouTube for probably a month or so. And the other question you already answered, which was the difference between banks and credit unions. So thank you.
Yeah, you're welcome. Okay, thank you, Rachel, and thank you for the questions. So let's go on deposit account. What is a deposit account? A deposit is money that is transferred into an account. So every time you take money and you put into account, you deposit money into the account. So when you put money in the account, you see this. And the next thing is we want to take money in the account. When you take money in your account is you withdraw money in your account. So every time you want to deposit, you deposit money, you put money in your account. Withdraw means that you take money, remove it from the account. You can remove, there's different ways to withdraw money and deposit money. One way to deposit, if you open a checking account, you go into your bank or credit union and you take your money and you give it to the teller or the person, the financial advisor, advisor that sits there, and they will deposit money into your account. If you want to withdraw, you can go the same. You can go there and complete the form, and you can withdraw money in your account from your account. Also, there's ATM that will go there. There's different ways that you can actually put money in your account and withdraw money in your account. And I will go over it in a few minutes. What is a checking account? A checking account is a deposit account held at the financial institution that is secure and easily accessible and used to manage your income and expenses and pay bills. So a checking account is really an account that helps you to manage your money. So let's say you put $100 in your account and you know that tomorrow you're going to buy a sandwich someplace, or you want to buy shoes. You can actually use this account to manage your expenses. So this is specific. Checking account is a specific account that you manage your expenses and pay your bills. So, but also there are different kind of accounts. We want to make sure that there are accounts that help you grow your money. So those are savings accounts. Savings account is an account that lets you store your money securely and you earn interest about it and over it. And so I'm going to talk about what is interest in a minute. The financial institution will pay you interest to keep your fund deposited, usually those are accounts that will help you to save money for the long term. So you want to save some usually for emergency, or maybe you want to save for going to school, or anything that in long term, this is where you keep your money. So to manage your money, you want to have a checking account. To save money for the long term, you want to have a savings account. So what I recommend is to always have a checking account and a savings account. And it's great to have a savings account because it's really, saving account is like the piggy bank that you have in your house. You just start putting money into it, and you want to make sure to create the habit of start saving, putting more money in your savings account. So actually you have money when you need money, you have it in your savings account for emergency or for the long-term plan. Most cases, people use saving account deposit fund and they will not use in short period of time. You can withdraw the money from saving account anytime unless the financial institution has some restriction. Some financial institution, I mean, most of it have restriction. You cannot withdraw more than 6 times out of your savings account in 1 month. If we do withdraw, you may be penalized for withdraw the money, because the purpose of checking account, a saving account, is to save money for the long term. But you can withdraw at any time. If you go over 6 transactions, withdraw transaction, you may get some fee penalty to encourage you to keep your money in your savings account. What is a money market account? So money market account it's a type of saving account. You're going to hear money market account, but money market account, the difference between a regular savings account and money market account, that money market account, usually to open a savings account, you will need probably about $25 to start the account, and you will start earning interest on this $25. And every time you put money, you will make, you earn more interest. Money market account, usually the balance requirement to start the account is depending on the institution, is between $1,000 to $2,500, and usually you earn a little bit more. Interest on your money that sits in your money market account. Now, on your checking account, you're able to write checks, because today most people don't you write check, but this is really called checking account because people used to write checks. If you've seen checks before, used to write check and send them. A savings account does not have checks. You can write a check from the savings account. Money market account do have checks, and usually you can only write 3 to 6 checks a month out of the money market account. But money market account, again, it's savings account that will allow you to earn a little bit more interest, but the balance that you will have to have in it is higher than regular savings account. What is certificate, or sometimes your certificate or certificate of deposit? So certificate of deposit is similar to savings account. However, what happened with certificate of deposit, usually you earn higher interest rate, but what happened, you will deposit the money, certain amount of money for a certain time, and you cannot withdraw it. If you withdraw this money, you will receive a penalty. So it's like you come to the financial institution. Let's say there's some certificate that start at $1,000 or $500. Most of it is start at $1,000, and you commit to put certain amount of money, the $1,000, let's say for 1 year, and you say you're going to earn certain amount of interest rate. Let's say, just for example, 1% on it, and money is locked for a year. You can't touch it. If you come to the financial institution and say, I need this money, you still can withdraw it, but however, you will have a higher penalty to withdraw it. So sometimes you lose money if you take this money earlier. It's a contract that says that I will put certain amount of money for a certain time, and I earn certain interest on it, and I will not touch this money until this money mature. That if it's a 1 year, I mean that it's mature within a year. And within a year, I can take it out. But if you do it before, you will have penalty. So this is some of so we talk about checking account, savings account, money market account, and certificate. Those are accounts that actually you can put money into, you deposit money into, and help you to manage your money. So checking account, again, is to help you manage your bills, manage your money, and savings account, money market accounts, and certificate is where you want to save money and put money for the long term and help you grow your money. So I will encourage you to have money in your checking account so you know how much you spend every month. However, to start growing your savings account, you save as much as you can. And saving is a great habit for life. Is your money insured? So you remember I had the first slide that talked about the people used to work with a small wallet or had this all the coins with them and they used to go pay. But or some people has also talked about people hide the money in the wall or under the mattress, and if something happened, all their money goes away. So if there's a fire or something, they lose their money. So when you put your money in a financial institutions, most financial institutions are secure. So it's called deposit insurance, and um, the all financial institutions insure by the federal government. So when you go into to open a checking account or savings account, you want to ask your financial institution, are you sick? Are you insured? And if it's a bank, usually banks are insured by Federal Deposit Corporation, FDIC. It's a government corporation that insure all federal and state banks and that are member of the Federal Reserve. So if you see it Wells Fargo, Bank of America, and other banks, they insure by the Federal Deposit Insurance Corporation. Credit unions are insured by National Credit Union Administration, CUNA. Has the same insurance. Credit unions and banks has the same insurance on the account. It's up to $250,000 per account for a single owner. I mean that if you only want it on the account, you secure up to $250,000. I mean that if something happened and you have $100,000 in your account, and let's say the bank can go out of business, you will get your money back. I mean, you're not going to lose your money. So the difference is if you hide $100,000 in your mattress and there's fire, you never can get it. If you go to the bank and you put it, this is insured. So when you go and open your checking account and savings account, it's always great to ask the person, the teller, the person that helped you, the financial service representative, are you insured? And they will have a small sign that say by Federal Deposit Insurance Corporation, FDIC, or credit unions by the National Credit Union Administration. And it's provide you the same. Credit unions and banks have the same insurance on the account. It's just different agencies managing it. Standard insurance amount of $250 per depositor, per insured bank or credit union for each account ownership category. I mean that if you have multiple accounts, you will have more insurance. It's per account that you have. Any questions so far? Okay, so let's talk about a little bit common banking terms. Talk about interest. You probably heard about interest. You've heard about ATM and PIN number, account number, routing number, debit card, online and mobile banking, and fees and disclosure. So let's talk about interest. You hear about interest rate. You hear about I talk about savings account, you get some interest. You talk about, sometimes you hear about loans. What is it? People ask, what is the interest rate that I receive on my loan? So what is interest really? Interest is a fee paid on the borrowed money. When money is deposited in an interest-bearing bank account, interest typically paid to deposit a percentage of the amount deposit. So I'll make it very simple. When you go and deposit money in your account, it's mean that the credit union or the bank are borrowing money from you. Okay, so you deposit mean that they borrow money for you. So when we borrow money from you, we will pay you interest. So if you put savings account will pay you interest. I mean, it's the fee that we will pay to get your money. Checking account, some checking accounts will pay some interest, but most of it is it's savings account, money market account, deposit, certificate of deposit. This is where the bank borrow money from you. You lend your money to your bank, to the bank or the credit union, and they will pay you interest. And interest always comes as a percentage. So you're 1%, 2%, or sometimes you hear basis point. So really, it's 100 points per 1%. But I'm not going to make it too complicated. So let's say that I'll just give example, and it's not the rate that you get now. But let's say you just deposit $1,000 in your savings account today, and they will tell you that you will receive 1%. It's not the rate you receive today, but let's say as example, you receive 1% of $1,000, meaning that you will receive a 1% from the bank of the credit union for you putting the money in a savings account. Now, when you borrow money from the bank or the credit union, you actually pay percentage to the bank or the credit union, mean because you use someone money. When you use someone money, you have to pay fee. So interest is a fee. When you give money, you get this fee for someone using your money. When you take money, you pay someone else this fee, the interest, to use their money. So this is really what interest rate, in a very simple term, what it is. It's when you put money in your bank, you get interest rate, meaning you get fee from the bank for or the credit union for using your money. When you take a loan from the credit union and the bank, you pay a fee for using the money, and you pay interest to the lender, to the bank or the credit union. So the financial institution pay you, it's on the savings account. The financial institution will pay you interest for using your fund. In this case, you are the depositor. You deposit money, you will get interest for it. If you put it in an account, that will give you interest. So when you go to the financial institution, you will always want to ask, what is the interest that I get paid on my savings account? What it means that how much will I get paid if I put $1,000, that this is going to be the principal. What I put, what is the interest? How much you will pay me? And you can look at this. Sometimes if you look at any newspaper or you look at any, you can Google it, what is the interest rate on savings account, you will receive different institution will pay you different amount. And this is where it become competitive. They want you to bring money into the financial institution. So each institution will pay sometimes different amount, but usually it's very, very close. Most institutions are very, very close. A loan account, when you pay the financial institution interest for using their funds, meaning when you take a loan, you borrow money from the financial institution, you will pay interest. So if you go to take a loan, if you hear someone take, let's say, a credit card, talk about credit card, what is the rate on the credit card? I mean, what is the rate? How much was the fee that I will have to pay to using your money? Or what is the rate on a car loan? Is it 2% or 3%? Mean that what is the percentage from the amount that I will have to pay back as a fee for using your money. And this is the way financial institutions make money. They actually they take money, they take money that you put in the bank or the credit union, and they use those funds to lend them to other people. And the difference between what the interest that we pay the people that put the money in, what we lend, it's the margin, means the difference that we make money. So when you borrow money, you pay interest. When you put money in the bank, you earn interest. Any questions so far on it? And I'm going to read a little bit faster because we don't have time to go into more details, but you can always, to make it very simple, just remember when you go, always ask, what is the interest? What is the interest that I'll receive on a deposit account, or what is the interest that we'll have to pay on the loan account? ATMs and PINs. So you remember we talked about the fact that you have a checking account or savings account, but checking account, deposit account within the credit union or the bank. And how do I have access to my money? So the different way, one, you talk about you going to the branch and you make a deposit or take money from your account. The other one is ATM. Many people have you seen ATM. ATM stands for automatic teller machine. And so when you get your checking account, you'll probably have your ATM or debit card, and I'm going to go over it. And it's a tool for you either deposit money into your account or to take money out of the account. So ATM is acronym to automated teller machine. ATM enable customer to perform basic activities. You can inquire what is your balance. You can withdraw cash. You can transfer money between accounts, and you deposit checks and cash. And you can do it 24/7. So it's very convenient because most of branches are not open 24/7. So whenever ATM, it will allow you to do a transaction. One thing you want to make sure that when you use ATM, sometimes there are fees that are associated with ATMs. If it's an ATM that it's your bank or credit union ATM, they will not charge you any fee because you use the services. But also if it's the network that ATM works on, you will not be charged. But if it's, sometimes you hear it's out of network transaction, mean that it's not part of the ATM network, mean that you will have to pay some fees to use the ATM. Now, what is PIN? A PIN number is a personal identification number. So in order to link to your account, when you put your debit card or ATM card into the ATM, you have to have a secret PIN, and it's usually between 4 to 6 digit the PIN, and this is your PIN that actually it's a secret PIN that allow you to access the money in your account. Never ever share your PIN with anyone. Make sure no one see what your PIN number. Never put your PIN number with your credit card or with your debit card or in your wallet. Make sure that you remember it and don't share it with anyone, because this is only one that you have you will have the PIN number. Sometimes a lot of cases, and I'm going to talk a little bit about the security later, but always look at your environment around the ATM, get familiar with the ATM. When you open a checking account or saving account, I would encourage you, most branches do have ATM either inside the branch or outside the branch. Ask the financial representative to go and show you the ATM, because sometimes what happens, a lot of frauds that happening, and there will be scammers, ATM scammers that attach to the ATM, and there'll be cameras. So people will be able to scam your card and actually with a camera see your PIN number. So you want to make sure you're familiar with the ATM. What is ATM? You always make sure that you look at your environment. You want to make sure that people be stand behind you, people not looking over your shoulder and so forth. So you have to be very, very careful. But when you get your PIN, never share it with anyone. And again, you will receive money. A lot of ATMs today will give you $20. Different, used to be only $20, but now you can get $100, $20, $10, $5, and so forth. The different amounts of money. You can actually choose what bills would you like. Any ATM do have on account certain daily limit on the account. So let's say you have $1,000 in checking account. You decide I'm going to take all of it. It might be block you because it maybe only has you're able to take out $600 from the account. So you want to make sure that you really understand how much money you can take on the ATM. So talk about a little bit about checks. I don't know how many of you seen checks before. I just want to stop for a second. Any question, Rachel, so far? Okay, no question. So account numbers and routing numbers. So this is a check. This is a copy of a check. Of course, on a check, you will have your name and an address on a check, but this is a generic check. And as you see here, on a check, we have a routing number, account number, and check number. So the routing number is really the number of the bank. What is each financial institution has their own routing number. And it's mean that we know by identified, where the check coming from, what institution and what company. It's really identified. It's a routing number. It's a number identify the institution. The next number is your account number. It's your specific account number, and it's only you that have this account number. You don't have duplication account number. This is only you have the account number, and it's your account. This is what identify that this is your account. And the check number, you have check number from 1, 2, and going all the way. This is check 1200. Each number, you can have you can give twice check number 1200. So you have always one unique number for each check. So this is what account number, routing number is the number of the institution, and each institution has their own routing number. Sometimes you will ask I have 2 sons, 2 teenagers, and sometimes they have to put they did some complete some form, and they had to put what is the routing number for the financial institution. You can find in your checking account. If you don't have a checking account, Most financial institution will have it on the website. It just when you go and search it on the website, on the website, just key routing number and it will give you the routing number of the institution. So this is the information. Debit card. A debit card, so most of you, when you open a checking account, you will receive a debit card. A debit card is a tool that will help you to make transactions on your account. Many times, a debit card will have a PIN number to it, attached to it as well. And so it's attached to your checking account. So what happened, it's like a digital check in a way. And you can use it in what's called point of sale. And you go to the supermarket or a store and you swipe your card, you put it in, or sometimes you just wave it, or you put it under, put it into your Apple Pay. What happened, it's connected to your checking account and it will just do the transaction. So let's say you go to the supermarket, you put your card in the reader, and you have to put your PIN number. You put the PIN number, and it will take money directly from your checking account. If you do not have money in your checking account, this card will decline. There's no, so it's dependent on how much money you have in your checking account. Let's say you have $1,000 in your checking account, and you make a transaction for $50, and you go to the store and you use it, it will go through. There's no problem. Let's say you have $100 in your checking account and you have to pay $200 in items that you buy. Let's say you buy shoes and they cost $200 and you use the debit card, it will not work. It will decline because you have no money in your account. So it's the debit card is tied to your account. And it's deducted, when you use it, it's deducted automatically money from your checking account. So you don't need to carry any physical check or anything. You can use the debit card. And most people some people put the debit card when you're a teenager, you don't have a credit card yet. You put a check, you put a debit card in your Apple Pay or Google Pay or any other electronic wallet that you like and use, and it will register it. Sometimes you have to call the financial institution. They will have to give you an approval to link it to your Apple Pay or Google Pay just for security reason, but most time it's not a problem. You can actually put it in. The debit card will have, this is some of the things that will have on a debit card. So if you have a debit card, you have your bank or credit union information, the card number. People ask you, what is the card number? This is the card number. And it's also good until a certain time. Want to make sure that, for security reason, it's usually about good for 2 to 3 years. So you have a certain amount of time that it will be good for. The card holder name, what is your name? And then the logo of the payment network. Some people have Visa, some people have MasterCard, some people have American Express, is what the network that this debit card is using. In the back, there's a magnetic strip on it. And I'm sorry, let's go front. This expression there I talk about, the smart chip. The smart chip actually has a lot of information there that people will not be able to duplicate. There's used to be a lot of fraud on debit cards, but if they don't have the smart chip, there's a lot of information in the smart chip that prevent people to copy the information. Sorry about it. Okay. Then we have in the back, we go in the back, we have magnetic strip is where all your information is, most of the information is reside. So it has to be always, the information reside here has to match the information on the smart chip just for security reason. Hologram in the back, again, it's another security measure. And then there's a place to sign your card. Please sign your card in the back. And then there's security code. Without the security code, usually it's 3 to 4 digit security code. It will not be security code. Most of the transaction will not go through. And of course, the network logo, what it is, and bank contact information. This is where your bank or credit union will have the contact information. If you ever have an issue with it, you can always call the number that you have behind the back of your debit card and call directly to the financial institution. Something about credit card or debit card. Never give your PIN to anyone. When you call the call center in a bank or credit union, they will never ask you for the PIN number. If someone calls you and say, this is your bank, we have, we need your PIN number. Never give information. Say no problem. Let me hang the phone and call the number, this number, back of your debit card. Don't. If someone called you, I will say thank you very much for calling me. Don't give any information. They won't ask you your social security. Won't ask you any. No one ask you this information. If they ask you, it's a fraud. So what you do, you hang up for, say, I'm sorry, I don't have time right now. Let me call you in a minute. And you always want to call the number. If you get an email that asks you to put your PIN number in it and so forth, never do it. Always call this number or go to your branch and they will help you, but never give you information. Ever give your PIN number. No one's going to ask you for it. So online banking, also known internet banking. Today, most people use internet banking. You can log on your computer and you can actually see all your transactions. I'll recommend for you, when you open a checking account, you definitely want to make sure that you set up your online banking on your computer, on your tablet, and you're just able to go and look at all the information. You will see everything that you need to know. You'll be logged into your accounts, and you will see all the accounts that you have, all the loans, and all the information that you need on online banking. So I recommend for you, when you open an account, always make sure that even if you're in the branch, ask them to help you to set up your online banking so you're able to log into it. And of course, most people use mobile banking, so you can use it on your phone. Ask people, if you open your account and you have an account but you don't have a mobile online banking, make sure you do a login to your online and online banking, so it actually give you all the information about your account. I have a habit. I look at it every day and I can see if there's any fraud on my account, if a transaction I didn't authorize. It's kind of nice to have access to it. It's a great habit to have, but I will recommend, please do open in online banking or mobile banking so you have access to your account. You can make transaction, you can pay with it, you can do hook any Venmo or any other service that they have, and pay a friend with it. So want to make sure that you use all the services that are on a mobile banking, so you can take advantage of those. And if you don't understand, I would recommend to go to your branch or call the call center, and they will help you set up all your devices. Account disclosure. So when you open an account, there are a lot of disclosure. And when you open an account, it's a contract. A lot of people don't look at it as a contract, but it is a contract. So it's a contract between you and the financial institution. And you want to make sure that you read this. Don't just sign because you're told to sign. Make sure you read it. A lot of things you will not understand, but you will understand enough to know that this is a contract. Any contract that you sign, you want to make sure that you read. So I will recommend to look at the disclosure. If you don't understand something, ask the people in the branch when you open the account, what does this mean? Don't just rush into opening something. Make sure you understand a lot of disclosure. There's a lot of legal information there. I will take your time and read it, because it's your money and you want to make sure that you read what you sign for. So this is, and also when you do a disclosure, also it gives some a fee schedule. A fee schedule is, sometimes you'll be charged fees. So let's say if you go over what you have in your account and you charge over what you have in the account, there'll be some fees that be involved there. So you want to see what fees you will receive if you go and you have a balance in savings account. Let's say some institution will say you have to have $100 in your savings account. If you don't have a balance of $100 every month, we'll charge you $5. So you want to make sure, see what are the fees that I'll be charged by the financial institution for doing some transactions. So it's very important to look at the fee schedule. And if you don't understand, please do ask people within the branch or your adult that explain to you what are the fees. And sometimes if you go, let's say you're traveling and your ATM is out of the network, and you take money out of the ATM because you need to, some of the fees can be from $5 to $6 to $20 to $30. So you want to make sure that you understand what are the fees that involve in opening an account, and what are the charges are if there are charges. So there are checking account fees, the minimum balance charges, the overdraft charges. If you overdraft, I mean you pull too much money from your account, you don't have to cover it, you will have a charge. If you return deposit charge, meaning you put a check in and the check is bad check, you will be charged for it. Hard copy statements, if you ask for a copy, I will recommend for you to sign for e-statement on your account. But if you want to need a hard statement copy, there's going to be fee for it, and ATM fee. So you want to see, and lost card fees. Sometimes people lose the, you get 1 or 2 free cards, but some people lose their card all the time. The financial institution may charge you a fee for lost cards. So you want to see what the fees are, all those fees. Some safety tips preventing fraud. Check your account activity regularly. You want to make sure that you log into your checking account after you set up your online banking or mobile device, mobile banking, and you check your account regularly. Never share your password for your checking, for your online banking or mobile device with anyone. Keep your PIN number and password secret. Don't share it and don't hold it in your wallet with your debit card. Use a strong password online banking and change it every couple of months. Change your password. Do not give account information over the phone to anyone. You don't want to give something, account information. Someone say, we are from the security from the bank and or credit union, and we found fraud on your account, and we want to give us your information, social security, account PIN number, and all this. Never give it. Hang on the phone on them and call back in the number that you have in the online banking or the number that you have on the back of your debit card, and call them and say, someone called me. And if they say, yeah, we called you, then you can talk with them. But no one will ask you your PIN number ever and your social security. Do not give information to email. Email is a big thing. Don't click on the email and put your information in. There are a lot of phishing accounts, mean that people will trick you to put your information. Never log into your account via email. Always go into your mobile device or your online banking. Don't click to email and try to log into your account. Sometimes it's a fraud account, it's a fraud email, and you can compromise your information. Do not click link embedded in email. Use antivirus protection, firewall, a spyware blocker. Do not use public computers for online banking. If you go to the library, there's sometimes people go to the library, log into online banking and forget to log out, and people come in, and happened before, and people just transfer money from their account. So make sure that you're aware of it. Check secure connection and report lost card immediately. If you lose your car, make sure that you report it immediately. Be aware of the surrounding an ATM, as I mentioned before. Make sure that you understand what is ATM and how ATM and if there what the cameras and so forth, and that someone is not taking your information. And watch for skimmers. Skimmers, again, it's a someone will put another device over the ATM, and you will swipe your card or put in, and they will read your information. So when I suggest is have your someone from your bank or your branch show you the ATM and explain to you, and they can tell you about how to find out what if there's skimmer or not on your own ATM. What is a loan? I'm going to go very quickly because this is a subject for next week. But a loan is extension of credit to consumer, meaning someone you need to have some money to buy something. The financial institution will give you a loan, will lend you money, and you will pay them interest. And this is really introduction more for next week when we talk about credit and what is credit. And we talk about type of loans before. We have mortgages, car loans, student loans, personal loans, and credit card and business loans. So I'm gonna, some things about boring about talking about money, but this is something that I'm going to talk about more next week. I know we have 5 minutes left, so I want to see, Rachel, if we have any questions so far.
It looks like Christine had her hand raised, so I don't know if Christine, are you out there and you have a question? Can you type it in to the chat? Or does anyone have any questions that they want to type into the chat? Don't be shy. This is we have the expert here, so it's a good time to ask. Okay, let's see. It looks like we got one. Can you explain credit quickly? I think we're going to go into that more
So,
next week, but go ahead. Yeah.
correct. So we're going to talk about credit next week. I'm not going to go into it because I don't want to confuse. Just talk about loans, but credit has to do with loans. When um, why we give loans and how do we make a determination about giving loans to customers, to members. So credit, I'm going to go in much depth next week when I talk about loans and how credit is built and how to build credit and how to manage credit and what is credit and all the factors that go into credit. I will explain next week. This is not so I will encourage you to participate next week session when I talk about credit and what is credit. Today we talk about a little bit about more of the overall what a financial institution, some of the tools and so forth, but next week we're going to dive more into credit and what is credit and so forth.
Okay, one more came in and it says, are skimmers in the card swipe slot chip reader or around the ATM?
Yes, so usually they put skimmers right, they put them right where you put the card. They put the skimmer, and sometimes they put them in gas stations. So when you put the card, they will put another device over where you put the card, and it will just read your card. So you need to make sure that, first of all, if you go to gas station, that the most gas station will have a tape that if it's not tamper with, because they have to connect the skimmer into it, so you need to make sure that it's not tampered. But when you go to ATM, sometimes there's where you put your card, it is something that stick out. You need to just nudge it a little bit, because what happens, the skimmer will come off this device. I mean, don't break the ATM, but just nudge it a little bit. If you see something, it's not, this is why I say you want to go to your branch and actually someone explain to you about the ATM and show you, and they can show you what to look for. And of course, you don't want to destroy someone ATM, but you want to make sure you're aware of surrounding. Suddenly you see a camera that's, stick up. There's cameras in the ATM, that every ATM has a camera, but if it's an outside camera that point right on your keypad, means that it's not part of the ATM, because no financial institution will have camera that point on your on the keypad where you put the pin. So and the skimmer, again, it will be placed right where you put your card, and so you can see if something that's not right, make sure you don't do the transaction there. Yeah. But again, I recommend to go to your branch, and they will explain to you, show you the ATM and how ATM build and so forth, so you know exactly where to look for. Any other questions?
Yeah, so just as a reminder, this is a 3-part series, and we'll have next Wednesday we'll talk about credit, and then the last Wednesday, what, remind me, Jerome?
Last one, we actually put everything together, talk about budgeting, the balance sheet, and how to manage your money. So once we put all this together, about the first years and the first session and second session about credit, we can put everything together and explain a little bit more detail. What is balance sheet, personal balance sheet? What is how to manage your budget, and how do you want to grow your assets and so forth for the future? How to manage your money, correct? Yeah.
Yay.
Good. Well, I really appreciate everyone. I know we have up to 3:00, correct? So we have a minute left, and if you have any more questions, please let me know. You can always send it for next week. And I know we're having a raffle, right?
Yes.
Rachel? Raffle. So you know what? I will actually up the raffle for $25 Amazon gift card that we provide.
That's awesome.
Yeah. So people that participate today, I know one person will win $25 Amazon gift card.
So how will they find out? I guess that's how, well, I guess what we can do is if you registered on Eventbrite, we can do it that way by email.
Yeah, I think you will have the people that registered, and they have to put the email so you can see the list, and then just do the drawing for one person from the list.
From there, yeah.
Yeah.
Okay, we'll do it that way then.
I'm gonna stop sharing now.
Okay.
Well, thank you very much, everyone, and I hope you learned something. And again, if you have any question, don't hesitate. Let me know. I'm looking forward to see you next week.
Yeah, we'll see you next week. Thank you so much for coming. Thank you, Jerron. That was awesome. We learned a lot. I
Wonderful.
learned a lot today. Thank
Well,
you.
thank you so much. I really appreciate the opportunity. Thank you.
Bye, everyone.
Bye.